We're going to get started with our next panel, Banking Sector Roundtable. The session chair is Arun Sharma, Chief Investment Officer, Global Financial Markets, International Finance Corporation.
Thanks. All right. Should we wait for people to settle down?
You want me to ask them to sit down?
Yeah, I think so. It'll be good
If we could take our seats so we could get the next panel started, we'd appreciate that.
Okay. All right. Well, welcome to this panel, which is the Banking Sector Roundtable. Again, we're very privileged to have a very interesting and qualified panel of eminent executives from the Indian financial services industry, and we have a very good mix of the public sector banking, private sector banks, and the non-bank financial sector, and all leading players from each of these key segments of the Indian financial services industry. Representing the private sector corporate banking sector is Mr. Parthasarathi Mukherjee, Head of Large Corporates at Axis Bank, one of our leading private sector banks. Also, in the spirit of full disclosure, an IFC client. Mr. Brahmaji Rao from Punjab National Bank, another close relationship of the IFC. He's the Executive Director, which is a very, very senior position, reporting to the CEO. Mr. Sundararajan is, of course, a Group Director of the Shriram Group, one of our most successful financial services companies in India, particularly with a unique track record and success in the auto financing and the vehicle financing sector, which is before, I think, we can say a pre-Shriram and a post-Shriram period in that business, because it was not considered to be a money maker, but their excellent company has shown the way on how a business that is considered risky can be made into a success with the right procedures, the right controls, the right underwriting, the right management. And it's a path-breaking story which all of us, I think, in India should be proud of, and it's a pointer to the future. And so we look forward to the deliberations of this panel. I will introduce myself briefly, but only briefly because I was here yesterday, so I don't have to speak about myself again. I work with the IFC, but in addition to my infrastructure work, I also look after our financial services business, and I'm very engaged in our financial services work in India, and therefore particularly honored to be moderating this panel with my eminent colleagues with me. So I will ask Mr. Rao to introduce himself and his bank and make some opening remarks on the challenges and the opportunities from his perspective as a public sector bank, and it's and really speaking for the entire public sector banking sector, which is about 70% of India's banking system assets. So, Mr. Rao.
Yeah. Good morning to everyone. Yeah. Before talking about how the public sector banking operations would be for next 5 years, I will run through the initiatives taken by Reserve Bank of India, the regulator, and the government of India regarding macroeconomics are concerned, and banking sector in particular. For the last 2 years, of course, in the face of high domestic inflation, the banking industry has shown high resilience actually. But now things are looking up, sentiments are improved, and a lot of initiatives taken by Reserve Bank of India and Government of India. I will touch upon those points. See, in the Union Budget for 2014-15, government has made initiative for the banking industry, particularly by giving thrust to the infrastructure. We can go for mobilizing resources through infrastructure bonds. Must be at lower cost, because it need not account for CRR, SLR, and private sector advances. So these resources typically will be used for incremental financing to infrastructure, and some group or certain group of housing which is doing extremely well as on date. Secondly, in view of mounting NPAs in the recent past, so they made revamping of debt recovery tribunals, and they thought of establishing another 6 DRTs. Apart from that, so they have given guidelines regarding capital requirement, getting the capital without depending on much on Government of India. Typically, public sector banks depend on Government of India for acquiring capital. So they eased out many guidelines, so we can go to the market and get our capital. So instead of going for great expansion and getting the capital, now we can go to the market and get the capital, then go for qualitative great expansion. Secondly, regarding recoveries are concerned, they have made one more very important guideline regarding willful defaulters. So out of the most of the NPAs, we are observing that this is because of willful defaulting. So they made a guideline for that. Of course, guidelines have been there for a long time, but execution levels are very low. Now with that, not only the promoters or companies who are willfully defaulting, so that we can go against the guarantors also. The guarantors automatically step into the shoes of the promoters or borrowers. So they cannot absolve their liabilities at any point of time. So these things, it will give strength to the banking industry for the recoveries. It started giving the results also. And as per the macroeconomic conditions are concerned, the regulator has taken so many initiatives. Though we all realize that the balancing of containing inflation and growth is very important, the regulator has taken initiative or given importance for containing the inflation, which is giving results that, so against the targeted levels of 8% by Jan 2015 and 6% by Jan 2016, now it is CPI is reduced to 7.8%, giving the indication that it's coming down month by month, and WPI is reduced to 3.4%, and the indicators are, we are seeing that IIP numbers are growing by month, but for August, because generally it is a lean season typically in India, and PMI numbers are giving so much confidence. It is about 53%. Savings confidence are improved. Investments in industry and manufacturing sector is improving, and particularly the growth in the industrial production is improved. It used to be negative few months back, or 6 months back. It is improved to 3.5% growth. These are the indicators that giving very confidence. And though we are not seeing that exponential results as on date, the sentiment is improved and things started coming up. And practically, if we see, the proposals are flowing in, though it's not huge. Some sort of proposals are coming in now. It is getting processed, and some releases are also happening. That we hope that because of this great growth also will happen now. Apart from this, as per this capital is concerned, so they have made some easing out, because we typically completely depend on Government of India. They have taken a call that reduction of their holding in PSU banks. Now all the PSU banks are having government holding of about 58% to 82% like thing. They given a guidelines to reduce their holding from whatever level now they are having to 51 or 52%. So to that extent, we can go to the public and get the capital. Apart from that, particularly regarding AT1 and Tier 2 bonds are concerned, they have eased out some guidelines. The periodicity has come reduced from 10 years to 5 years. The loss also from permanent nature to temporary nature, they have done it. And for the investor's point of view, it is very comfortable. And there are no caps as on date as for this debt route is concerned for acquiring the capital. We can go to the market at any point of time and get the capital. Particularly, stronger banks like Punjab National Bank, we can get capital through this route, mostly at the lower price than the market price, which is happening actually. Last month we got about 1,500 crores to this route at 9.5%, 9.25% against the market rate of 9.5%. So these are the initiatives they have taken and given strength to the banking industry, and particularly governance point of view. So now we are facing a lot of challenges as per the capital is concerned, Second one is governance is concerned. Definitely is an issue. So these three issues are addressed. As far as the governance issue is concerned, so they have constituted a committee headed by Mr. P.J. Nayak. So he has given so many recommendations. So this one of the recommendations are this reducing the government holding in the public sector banks from whatever level they are having to less than 50%. Of course, it is accepted to the partial level. They are reducing to 51 or 52%. But for that, all the guidelines or whatever suggestions they have given, they are going to implement. Not only accepted, it's going to get it implemented. Particularly, that separation of CMD post. So separating into executive managing director or non-executive chairman to make the board much stronger, independent. Instead of nominating people from RBI, Government of India, now they want to nominate independent directors. So they want to give more independence to the board, take their decisions, and to improve the governance. So these are the steps taken, and I hope that this will address the issues. As per next 5 years the banking is concerned, the major transformation or paradigm shift what we are observing. So now, so we are having certain sizes, we are having different banks, PSU banks or 20 banks are there. So we are visualizing that it will be consolidated into 3 or 4 big size banks at a global size to address the capital issues and going globalization and going and establish branches in abroad, foreign countries to cater the needs of the widespread diaspora of India in foreign countries and going for more acquisitions. It's an opportunity as on date. So these things we are visualizing. Secondly, from universal banking to differentiated banking. So a committee by RBI established under chairmanship of Mr. Nachiket More and given the suggestions that we should go for differentiated banking, different niche banking is concerned, retail banking or payments banks or private sector banking, self-help groups. So these things are happening and 2 licenses are already given by RBI in this direction. So this is one thing we are visualizing. Thirdly, digitalization. With the success of ATMs and machines are concerned, so now demographics of India also is confirms that and supports that. So going for digitalization or phone banking or internet banking, things are happening widespread, and this is one area of opportunity we are finding, and coordination globally and to address the risk managements. Maybe cyber crimes, if you are going for more global digitalization, there maybe we have to address the cyber crimes are concerned. So when we coordinate globally, I think that these things can be addressed very systematically. So these are the things what we are visualizing. And secondly, we are also, because of the past experiences, and NPAs are of course mounted, we are taking various steps for recovery. That is one of the initiatives also taken, that deleveraging of the corporates. It is happening very systematically. We are finding 5-6 groups they are doing in the recent past for 2-3 months. I hope that this will be exponentially will go ahead. That will give a cushion to the corporates and the banks also to reduce the NPAs. Not only this deleveraging, many corporates are thinking that large number of assets they are having. They want to sell out wherever the possibility is there. This is happening domestically, and FIS also showing most of the interests. So the groups like Lanco, GMR, and many more groups are started selling their assets. So these things are things are happening. More deleveraging is happening. More joint ventures also are happening. So these are the indicators that. So I hope that with the sentiment improved, things are happening. I hope that next 5 years, it's a great opportunity to the banking, particularly public sector banks are concerned. Thank you.
Well, thank you, Mr. Rao, for this very excellent overview of the opportunities. It's very clear that the Indian banking sector is at a crossroads right now, because there is a series of regulatory initiatives, there is a series of private sector initiatives, there are certain macroeconomic drivers, and certainly a large number of I would say, domain drivers in terms of e-banking, mobile banking, and all the disruptive innovations that are flooding the space. And there is a very cognizant approach of the Reserve Bank to take advantage of these, but at the same time make sure that the overall prudential supervision and the stability of the banking system is maintained, particularly in the light of the disruptive security implications possibly of some of these initiatives. So I think we are in for a very, very exciting time. And part of that excitement is captured, I think, by the innovative spirit of the Indian financial services sector, which is driven partly, of course, by the technology heritage of the financial services sector, which comes from its links with the Indian IT sector. So anything that's an opportunity gets very, very quickly picked on, because there is a very large entrepreneurial base that is really seeded by the IT sector, where people who have been working in IT companies have aspirations of entrepreneurship. And so there are 20 or 30 startups that have gained traction already in different types of mobile payments and so on and so forth. And we will see a lot more of them, and how they integrate with the banks and with the system overall is a really exciting field that has a lot of investors watching very carefully, and obviously learning a lot more about it very quickly. But part of that innovation also is coming from, and I think a very large part is driven by the non-bank finance company sector. Although the NBFI sector is a relatively small portion, I would say maybe not more than 15 to 20% of meeting the total credit needs of the country. But still, it is meeting a very important segment's needs, which is typically not so easily serviced by the banking system. And they really offer an amazing I would say capability that adds value to the banking product. And there is already a very, very great degree of collaboration, as the NBFI sector funds itself from the banking sector and then delivers that liquidity to the end users in a way that is more efficient and often more innovative, simply because of the way the business model works in these entities, with less restrictions from the central bank. And that I think represents a very big possibility, both for investors and obviously for the Indian economy. And a leader in that whole space driving this whole trend forward is the Shriram Group. And I will invite now Mr. Sundararajan to tell a little bit about his company and their plans, and how they see the NBFI sector really partnering with this overall I would say excitement and making a contribution to it, and seeing where they see themselves playing in this exciting landscape.
Yeah, thank you very much, Sharma, and good morning to all of you. Mr. Rao very succinctly outlined the glass that is half full, and I'm going to talk about the glass that is half empty. While as Shriram Group, we have really done whatever we can, both in the transportation sector, which I think is perhaps very important for the economy and the GDP growth. We have also done quite a lot on the MSME side, where in one of the listed entities, we've actually done the micro and small businesses quite well, and we have close to about 700,000 customers, mostly across South India, who were never touched by the banking system in the past. So I think by and large, in terms of growing over the last 25, 30 years, we have resorted to a lot of community lending fundamentals, and ensuring that we are able to provide value not only to our customers and to the employees, but also to the shareholders and investors. Where I was really coming from was the kind of regulatory environment we have in India. While a lot is being done or is proposed to being done in terms of encouraging not only branch openings, account openings and all that, there is very little that is done in terms of creating a lot of pillars for risk taking. If you really look at it, if financial inclusion has to happen, it has to happen through a lot of credit being provided to the underserved rather than opening bank accounts or encouraging payment distribution. As very rightly mentioned by Mr. Sharma, what NBFCs can do is very, very little. It's just the tip of the iceberg, and we are able to do it obviously because we have a light touch regulation. We do not have as much micro monitoring of RBI as what is happening to the banks. But at the same time, using that, we've been able to demonstrate, at least some of us have been able to demonstrate that we can actually go as much into the last mile coverage as possible, complementing the bank's existence and ensuring we get funding from the banks. After all, 75% of such large groups like Shriram also gets funded by the bank. And ensuring that the segments which we deal with, while if the bank deals with its priority sector, if we deal with its not priority sector, those kind of differences, if they are removed, I am sure there's going to be a lot of opportunities for the bank and the NBFCs to collaborate together. The other key issue here also is that understanding the segments in which we are operating. I don't think the reason for banks not getting into these segments is because of their inability to take risk. It's more because RBI has not created the necessary structures and incentives for such businesses to be done. And it's very important that if more banks start getting into this sector, the cost of such lending will come down, and it's going to only help the overall community and spur growth even more. If there is validated data which says that 42% of the contribution of GDP comes from the MSME space, and if we all know that MSMEs are are largely underserved or unserved, it only goes to say that the opportunity in India is so large that it's important that rather than resorting to global forays, we need to really look at what we can do in India and ensure that we contribute significantly to the GDP growth. That's all I have.
Thank you. Well, thank you very much, Mr. Sundararajan. I think that very much gives a little more focus to what I was trying to say from a practitioner who's been doing this now for more than 2 decades. And I think it's a very exciting time for investors to look at this sector, because I think we've had a lot of interest in the banking sector, but we're not as much in the NBFI sector. And I think it's an opportunity that a lot of investors should look at very carefully from both an equity as well as a fixed income perspective. I would like to emphasize the fixed income bit a little bit, because we ourselves have got into that role a little bit more in providing debt, because as non-deposit taking entities, these entities are always demanding fixed income asset funds, because they're always dependent upon raising money from the market. And it's a bit of a disadvantage, but that's the nature of the business. You get the RBI flexibility because you are not really as a beneficiary of deposit insurance or the implicit guarantee of the central bank, because you're raising funds from the market. So that becomes a very important sort of, I would say, customer for any fixed income investor, because they're stable, they have good ratings, they deploy the money, they make good returns. And because they make good returns, they can offer good fixed income yields. So I think it's a fantastic yield play. And we in IFC certainly are very aggressive in essentially seeing how we can build up our fixed income portfolio, working with the NBFI sector. And so that's something I think that I would encourage everybody in this room who's interested in investing in the financial sector to take a long, hard look, because it's a very big sector. You have to, of course, do your due diligence, because there are thousands of NBFIs. Not everybody is a Shriram group, but they're really excellent companies, and there's some not so good ones. So, but that's what I guess we are all paid to do, is to make sure that investors' money is invested correctly and for the right returns. But I think the importance of, I guess, this conversation is to highlight the opportunity, and of course ask the right people, whatever questions you may have at the end of this panel's remarks. And that then brings me to Mr. Mukherjee, who's the head of large corporates at Axis Bank, which is one of the most successful private sector banks established, I guess, about 10 years ago or 11 years ago in the first wave of, I would say, relicensing of private sector banks. And it's been very successful in building a very, very unique and I would say very prominent franchise in India across the board, but particularly successful in the corporate sector. And I'd like to ask Mr. Mukherjee to share his thoughts as the banking system goes through all these changes that we are talking about, and where is the private sector banking system getting itself positioned in this, what I might even dare to call the emerging new era in Indian banking?
Well, Mr. Sharma, thank you very much. In the first place, let me tell you that we are a bit older than that. We've been in this business for about 20 years.
20 years.
The private sector, of course, now has very quickly merged into the banking space in India. So now it's an integral part of the banking system in India and has a share of about 15 or 16%. The public sector, of course, has a little over 70%. But keeping that in mind, the private sector, despite its relatively small share, has very quickly caught the agenda, if I might say so, on a number of issues, particularly relating to, let's say, the focus on the customer, as well as service issues, and finally, of course, pricing. And I must say that with the advent of the private sector banks in the country, the focus on the customer has increased substantially in banking. So today, the customer is the central point of a bank's existence, really. While we might have all said it all along, the fact remains the private sector, with its emergence, has been able to very successfully bring the customer right in front. And going forward, I think the way the banking system has evolved, I dare say we will see world-class banking being offered by Indian banks. Not necessarily by the private sector alone, of course. The public sector has made remarkable progress there too. But the private sector, of course, with the various advantages that it has, including the fact that it is a relatively more recent phenomenon and carries obviously to that extent less baggage, finds it a lot easier to push the agenda as far as customer focus is concerned. The private sector has also taken the lead as far as initiatives are concerned, innovation is concerned. The private sector has worked to digitalize banking a lot faster, to the extent that today, of course, the word digitalization is quite common in banking. It's nothing special, really. But if at all the credit has to be given, I dare say the private sector has contributed immensely. If you look at the Indian banking space, effectively the banking space was divided into three parts. Largely the public sector banks. You had the multinational banks, which also were a force to reckon with in India. And thereafter, the emerging private sector banks that came in. Within the private sector, of course, you had two sets of private sector banks. You had the old generation private sector banks, which were a few in number, which were relatively small in size, and which largely catered to individual pockets in the country. And of course, you have the new private sector banks, as they were called, the new generation private sector banks, which emerged from 1994 and onwards. And these banks have been more national in character. They've spread out across the country. My own bank is evenly spread out across the country. We have over 2,500 branches. In terms of, let's say, the ATM network, today we have the second largest ATM network in the country, after the State Bank of India, of course, which of course is a distant first, really. But having said that, what lies ahead for us? I imagine that we are at the threshold of great new things happening in the country. We have a new government in place. The government has brought with it immense hope of where we will be going. And the banking system has traditionally been a mirror of the state of the economy. In the recent past, the system has seen a lot of stress, which is again mirroring what the economy has seen. Going forward, the banking system looks forward with a lot of hope on the developments that will happen. I see immense opportunities for banking going forward. We will see a lot more being done on the corporate banking side, but I dare say even more on the retail banking side. And quite frankly, the opportunities in retail in India are immense. The whole world looks to India as a large market, and quite clearly the banking system in India has already seen that. So the progress that we see is even more on the retail banking side. So we constantly digitalize, we try to optimize offerings for customers, we try to reduce costs of offering services to customers, and going forward, I dare say, customer business will be a lot cheaper also for our clients. In addition to that, Indian banks have not been behind as far as globalizing their business is concerned. By and large, Indian banks have not really got into too much of the local businesses in the markets that they have ventured out to. They have preferred to follow their Indian clientele abroad. And I imagine that is perhaps right, because that is where our strengths lie. We understand the Indian client, and we are willing to go out with him or her to do the business abroad. I imagine we'll see a lot more of that, and the whole world is today one marketplace, so you'll see a lot more of India across the world.
Thank you very much. So I think we have now some time for questions, and barring questions from, so I'll first give the audience the first dibs, and then I have a few questions of my own. So, but maybe we'll take some questions from the audience. Please introduce yourself and just mention which panelist you would like to address your question to.
Hi, this is Joe Garofoli. I'm with Rock Global Holdings here in New York. My question is for all of you. It's regarding banks and their NPLs, especially with corporate NPLs, and how they see that being resolved. Do you expect banks to recognize these NPLs and sell them in the form of a one-time settlement or otherwise? And how do you see banks dealing with this situation?
Would you like me to address that, or would you like to answer?
Yeah. Regarding
Go ahead.
Yeah.
Well, NPLs have been a bugbear for the banking system in the country for long. If anything, the system has been tightened considerably. The system does see stress at this moment. A part of this clearly is a reflection of the state of the macroeconomy, of course. A part of this could also have been contributed by perhaps over-enthusiasm on the part of banks in the past. But I dare say going forward, you will see some of the steps that the Reserve Bank has taken would considerably help in easing stress going forward. In the first place, of course, the Reserve Bank has taken the progressive step of bringing all banks together on the same plane. So a lot more of cooperation among banks is seen today. So banks work together in joint lenders forum to handle difficult accounts, stressed accounts, and we work together to work out corrective action plans for our clients. In the past, what used to happen was individual banks would work on their own, and in the process, very often the client who used to suffer. Today, because banks would work together, one imagines that the stress would be very quickly lightened for clients. There would be instances where perhaps the situation is beyond repair, and in such cases, banks will probably have no option but to recognize the NPLs and go forward.
Hi, this is Saurabh Lele from Loomis Sales. I have a question regarding the human resource problem that's facing the banks. So there's a big crunch of middle management that's going to come up in the next few years when a lot of the middle management that was hired 30 or 40 years ago start retiring. And how are you planning for that? How are you going to work through that? And I think that's a problem that's much more for the public sector banks than the private ones, but how are you both handling it?
Yeah.
Mr. Rao?
It's a valid question. This is one of the biggest challenges what we are facing. See, it was realized in the recent past, maybe 3-4 years back actually, because recruitments were not happening exponentially in the recent past for last 10-15 years. You rightly told it's not only banking industry, at large, almost all areas of operations, corporate, are facing this same problem, particularly in middle management. So what we have done after realizing this, of course, I think that private sector banks are well placed in this respect because they have taken steps in the past itself. See, now what we have done, that we are going for recruitments exponentially at lateral recruits also, particularly professionals at different areas of operations, and we have created leadership forums that for mentoring. We have all the top management people are taken one group of people and mentoring them continuously to make them efficient and responsible and reasonably responsible for eventualities. And different training programs, we are getting conducted for them. Mentoring is happening, very systematically. Of course, the issue is there. I think that it's getting addressed now, and within short time that we hope that we'll overcome that.
Thank you. There's a question here.
Hi, I'm Radhika Rajan with DSP Investments. Yesterday, one of the panelists, who is an FII investor, said something like, India is a great place because there's political pressure on public sector banks to extend loans to corporates who then have no desire, obligation, or necessity to repay. So if this is the nature of the problem, where there's no desire to repay and no pressure on them to repay, how do you think that's going to be fixed going forward? Do you think the new dispensation in India will result in changes to this kind of paradigm?
Yeah. So one thing is, of course, that our boards are not independent that much, and governance issues are there. I don't say that what you told is not correct to some extent. But the thing what happens, as Mr. Mukherjee just now told, see, this we have been in the banking for more than a century. So our processing skills are appraisal skills or underwriting skills are not at stake or something like that. But one thing is, with the past experiences, we can fine tune and make it qualitative time to time. That is being realized and getting addressed. What I told in the beginning itself. Secondly, what happened, that some sort of interference has been there, no doubt at all. So secondly, that the reason for this piling up NPs and all these issues are, one is quite related to the growth is concerned. Secondly, over enthusiasm of doing the business. So growth used to, because that growth rate used to be at 9.67%, and after that it has come down to 8.3%, very, very comfortable, and gone for more leverages. These are the things, created problems for us, and we have learned a lot from the past. Secondly, we ourselves are creating better governance, and apart from that, these are recent guidelines of the government that, as per the governance is concerned, the steps not only previously we used to think of that and taken the initiatives and guidelines are formed, but execution levels are not that much, up to the levels, required levels. So now, not only formulating and thinking of that and getting the things executed quickly, and I hope that steps were initiated by the government, RBI, and ourselves also. I hope that definitely that the issues will be solved, and in future, it will be comfortable position as per the NPAs and these issues are concerned.
Any other questions from the audience? Okay. Well, if not, then I can ask one or two questions. Yeah, there's one. Yes, Mr. Kash, please.
Well, I'd like to know about the banking sector. What would be the total valuation of the Indian banks, which you would go into the sector if one wants to evaluate the valuation of the banks in India? Have you ever made a sort of a global working on the valuation of the banking in the private sector and the government sector together?
Let me understand. Did he talk about?
No, I think the question is that has anybody done an assessment of what would be the market valuation of the Indian banking sector as an industry combined, taking into account both the public and private sector banks?
Now, I'm sure people have done that, but I'm afraid I don't have that answer. Having said that, the way I see it is, from the feedback that I get when I meet a lot of analysts is that the sector is still possibly undervalued. I must confess that I'm not aware of the actual valuation, so that's my first answer there, unless Mr. Rao can, of course, contribute something more than that. But having said that, I still feel that this is a sector that is significantly undervalued, partly because of the way we have projected ourselves in the past. This is a sector that is a strong cog in the wheel of the economy in this country, and if we are talking of taking India forward over the next 5 or 10 years, very quickly, this is the sector that's going to open out a lot more opportunity. Mr. Rao did make the very important point about the government ownership. So there is a huge amount of value that is still unlocked, so to say, particularly in the public sector. So I dare say going forward, you have immense opportunities coming up in this sector.
Yeah, to endorse Mr. Mukherjee's views, he rightly told that we don't have figures, but it is assessed. Secondly, as I fully endorse his views, that is quite undervalued. Yeah, we realize from public sector bank's point of view, and we always, day in and day out, we analyze that why we are undervalued. So, and many people are telling that it's come to our mind also 2-3 issues that particularly the asset quality is concerned. Yes, quickly we are working on that. Second thing is governance is concerned. So these are the major things apart from the HR issues are there. And all these things when realized, I feel personally that when the issues are there, that today we're all well equipped that, to get the solutions quickly. So now it's well thought, it is proactively well thought, and these things will be addressed that I hope that, that valuations will be improved. And we are working on that because we don't want to be undervalued anymore.
Question there?
Hi, good morning. My name is Vinay Karle from Williams Capital Group. This is sort of a two-part question for the panel in general. The Jan Dhan Yojana that was announced, how you, from the banking sector perspective, how you will handle the volume both from the accounts as well as the money volume. And the second question was that if, this is more of a theoretical question, but if the informal economy as we know, if that were to come online and use our banking system, sort of related to the volume question, how the banking system will handle that?
Yeah. See, of course, I forgot to tell that this is one of the initiatives, challenges, and opportunity for the banking industry for going forward in the future. So, a Jan Dhan Yojana, it is an initiative is already there. Financial inclusion has been thought of and getting implemented. Things are taken forward in that direction for a long time. But only thing is the appreciable thing as on date. So it is, a well thought and qualitatively now, and getting it executed. As I told, execution levels used to be low earlier. Now, each and every area of operation, we are thinking of getting the things executed. Otherwise, there is no use of getting the guidelines and thinking of that. So this Pradhan Mantri Jan Dhan Yojana is well defined now. It is a mission mode of the financial inclusion is concerned. So at least one person from each and every family should have a banking account. That also well thought during the financial inclusion time for last few years. But now, it's not only opening of the account. It's not, we don't want to have any more dormant accounts. Now, how to get it operationalized? What ways we can ensure the customer or make the customer to get it operational? One is direct benefit transfers should come there. Secondly, it is the primary responsibility of the respective individual banks to sensitize the depositors or account holders. So how inculcate the savings habit in them and see that operations are happened. Second thing is not only getting operations happened, so what way we can support those people, and is there any financial giving facility to them, any opportunity is there. So now this Jan Dhan Yojana, a part of the, just like, like financial inclusion, same thing is that. So today it's an opportunity for the banking industry. So it is just like, as Mr. Mukherjee told, unlocking the wealth. See, lot of wealth is there in rural India as on date. Semi-urban and rural places, lot of wealth, but it is not getting utilized. It is maybe in the properties, it may be in the some other form, because they are not going for diversified activities as happening in urban and metro places. Now we got the opportunity to reach them, as Mr. Sundaran has told. See, we have to go for the meet the customers. Last mile we have to go and meet the customers, ensure and inculcate, or we can find out, explore the possibilities of making them go for other activities, not only opening of account. So I hope that an opportunity, it's a big opportunity, things are going to be in a big way. If this rural wealth is unlocked, it will support the Indian economy like anything.
Well, thank you very much, Mr. Rao. We're almost out of time here, but I'll take maybe one last question, and then we will have to close the panel. I know it's a very interesting panel. I know you have a lot of questions, but the organizers have told me that we're out of time, so we'll just have to be one last question.
If you don't mind, I have another question on, again, on the public sector banks. So with the new government that has come in, they have a lot of new ideas for which they will need to partner with these, with the public sector banks in order to implement all that. But on the other hand, the government ownership also creates a lot of constraints, such as priority sector lending and NPAs and stuff like that. So do you think this is the right time to talk about privatization of banks or mergers of bigger public sector banks, or there's still more time left for that?
See, okay, see, I accept to some extent with your views. See, instead of telling that privatization, let us talk about independence. So that if that happens, that will solve the whole issues. Now, bringing down, see, though they have not accepted PJNI committee recommendations to bring it down less than 50%, so with reducing to 51% their holdings and nominating the independent directors and giving the independence to the board, I hope that that will solve the problem. Second thing is that government initiatives along with the public sector banks, the private sector lending, I'm not thinking that it's no more disadvantage. See, the thing is that agriculture activities are growing 25 to 30% every year, and we are growing in private sector also, and agriculture also about 25 to 30% every year. And if you see the non-performing assets what we touched, as far as agriculture is concerned, is not much. It is about 2% only. Second thing, one good thing happened according to our industry is concerned. See, previously there used to be more loan waivers assured by the different parties at the time of elections. So this is the first time the regulator has come out and told that no more debt waivers, and they are not permitting, particularly Andhra, when separated both the states, they have assured. But now RBI has not given the permission. It's not going to happen. Once the farmers are very capable to repay the loans. So typically these loans are, working capital loans. They will pay the loans and again avail that. But for a small part of that goes for term loans. See, now with these guidelines and stringent, views of the Reserve Bank of India regulator and from government also, I hope that the private sector advances and agriculture advances is a boon for the banking industry now. So because these type of things will not happen, that NPS will reduce in this sector drastically. I hope this is an opportunity.
Well, thank you very much, Mr. Rao. And with that, I would like to ask the audience to join me in thanking our wonderful panel for great discussion. And thank you very much, gentlemen. Appreciate you.